Hello, this is the chart profit video, 2nd of February, approaching 3 hours into the trading day. This is the S&P Pulse chart, and this is through Friday 1 week ago, particularly looking at the time period from this arrow here. It's the point where momentum on the daily chart turned positive here. And from that point on every day when I marked aggressive buying on the Emini profile, you can see the bars here on the spider are colored green, and the horizontal yellow lines show you the low of that aggressive buying day. And the point I'll be making here is that in a really aggressive trend up, we don't see the lows of those green bars subsequently tested. In fact, none of them had been through to this point, which, as I mentioned, was a week ago. I've said here this kind of pattern represents effective day frame buying, and I did mention after that that at some point this pattern will change, and I will watch for that. And I posted this pulse chart after the close on Tuesday this week, and I've said here the pattern just described, indicating a strong uptrend, was broken when Tuesday's close was marked below Friday's green bar low. So here's Friday's green bar low, aggressive buying day, and here's the close on the following Tuesday below that level, and that broke the pattern. And here I've said that although no aggressive day frame selling, that would be red, has yet been marked, yesterday's price action may indicate a slowing up of the daily trend. And note also that the price oscillator has turned down, so indications of a slowing trend. Okay, now let's quickly review the profile pattern for the Emini SP. There's that aggressive buying, green at top, that I just mentioned on the previous Friday, on the 26th. Here's the low of that bar. 80% of the time, the high of a green bar is exceeded within a day or two, and we've seen the low of that bar broken before the high. And further to that, as mentioned this week, we've got a minor controlling price at 28.39, which is here. And the last three value areas, Tuesday through Thursday, have been generated entirely below that line, below that controlling price. And as I wrote pre-open Thursday, currently the Emini is in a weak short-term location below that level. If we just look at that on the live 30-minute bar, you can see the resistance from that minor controlling price here. And today, at the end of this week, we're printing below 2800. Just back to the pre-open, I'm looking here at the sentiment that we follow each day, which is my version of the RIDEX assets ratio. And we've noted that on Tuesday this week, the ratio reached its highest level that I have in the database, showing really extremely excessive bullish sentiment at 27.55, which is an extraordinary number. Historically, that kind of number has indicated that the upside is limited at least, but let's have a look at some other sentiment extremes that we're seeing right now. First of all, this is the Investors Intelligence Poll, newsletter writers. Bulls percentage this week came in at 66%, that's just below 66.7%, which was recorded 2 weeks ago, and I believe that's a 30+ year high in the bulls percentage there. The bears percent this week was lower at 12.6, and that is the lowest that I have in my database, and that again, that's probably the lowest since the 80s. So a really extreme level of bullish sentiment in this poll. As we know, 4 weeks ago in the public poll from AAII, the bulls percent reached 59.8%, and that was a 7-year high. And 4 weeks ago, the bears percent fell to 15.6, which was a 3-year low. And the net, that's the bulls minus the bears, is at 16 at the moment, but it reached 44.2 just 4 weeks ago. That was the highest since April 2004. And finally here we'll look at the data from LIPA US fund flows, which is extraordinary this week. We saw inflows of 16.2 billion in the week to the 31st of January. So that's equity fund including ETF inflows. A net inflow this week 16.2 billion, but that lifts the 4-week flow number, that's the black line here, lifts that number to $60.7 billion over 4 weeks. And as I've said here, I don't have any other 4-week flow number close to that. It's up here. 30s are kind of extreme, these sort of numbers. So 60.7 billion is really extreme. And as I've mentioned here, considering that this is up from a negative 33 billion just 6 weeks ago, it just shows you the massive inflow that we've seen over that period from here to here in just 6 weeks. Just a quick look through the current charts. This is the spider. Looking here at the daily chart, closing week here. Sorry, that's not a close, that's where we are 3 hours into the trading day on the low for the week. Looks like this as a weekly bar. UK FTSE 100 index had quite a negative week here. We're heading back towards the support pretty rapidly at 74.13, which is the 18-month controlling price. An important chart, this one, if we see price printing time below 74.13, just be a major general indication of weakness. German DAX has already broken its important support, the 18-month here, and we're printing below that, close to the 4-month low, which is here in December. This is TLT, the bond ETF, sharply lower at the end of this week. We looked at this chart last week and discussed this support here at the halfway from this low back in March to this high. So we had support here and here, support again here, and in the pre-open around that time we were saying that if this proven support is broken, it would put this chart, in fact we discussed this last week, in a weak price location and suggest a test of the major down here at 119, and we're heading there pretty quickly. We had 2 or 3 days early in the week, this week, below that halfway point, and I've been mentioning that that's a weak price location, and it looks like we're going to see this test, but a particularly swift decline at the end of this week. Price below 119 would put the chart in a really weak price location. Time spent below that level would suggest that we'd see a retest of this low. This is GLD, the gold ETF. As we know, the major support down here at 120.90. I've introduced a level here. The 2-month controlling price just migrated to 126.60. Currently at the end of this week we're just printing a little below that, but recovery back above 126.60 would put the chart immediately back in strong price location. So if you're bullish on gold, you want to see price back above 126.60. Discussed this chart some length last week and these levels. The major support is here, which is the half range off the 2008 low. It's at 87.25 for the dollar index, and that is a big support level. It's been a little rally back in the index today. We're still currently in a weak price location. It's been in a weak price location since it broke below the major at this point, and then the 8-month developed, and I think that migrated to 93.46 in here somewhere, and then we had price below that level. Weaker again. It'd be interesting to see if the index reaches this support, what happens at that point. This is the dollar yen chart. There's a little rally back here at the end of this week. The first resistance is now the 2-year at this level here, 111.30. And the major up here at 113.70, so we're still in a weak price location down here, currently below that 2-year. Euro FX chart just finishing the week, most likely close to the recent high. First level support at 122.64, which is the 2-month. Finally the pound, just off a little today, but not far from its recent high. I had an upside target for the pound at 143.90. Just for fun, it'd be interesting to see what happens if the pound reaches this level at the same time the dollar index reaches that half range support. Okay, that concludes, and once again I thank you for watching.